Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's just try to unpack this, because honestly, the signals we're getting right now are giving me absolute whiplash.
Whiplash is a good word for it.
It's Wednesday, February 4th, 2026. And if you're looking at your portfolio, you might, want to pour a second cup of coffee.
Or something stronger, maybe. The market psychology right now is, it's bordering on schizophrenic. The numbers are painting a very specific and pretty gloomy picture.
Right. You just look at the screen, you see red, you see extreme fear, you see a market that looks like it wants to just hide until spring.
But that's just it. That's the screen.
But then, and this is where it gets really interesting, why we're doing this deep dive, you look away from the price charts. You stop doom scrolling for a second.
And you look at what's actually being built.
Yes. And we're not talking about little app updates here. We're talking massive foundational infrastructure. We've got diamonds being tokenized on the XRP ledger. We have AI taking over water management in Saudi Arabia.
And the biggest stablecoin issuer in the world is trying to fundamentally change Bitcoin mining.
It's a huge divergence.
That's what we need to talk about. It's that classic split between, the price action and the fundamental value being built.
So the mission for this deep dive is to look past that immediate volatility, to get past the red numbers and really understand the structural shifts happening in mining, in real-world assets, and global regulation.
Even while the market is screaming panic.
Exactly. We've got sources from raw market data, government policy updates, and some heavy corporate announcements from Tether, MetaMask, IBM. So let's start with the elephant in the room, the fear.
Yeah, let's.
What are the numbers actually telling us right now?
The numbers are, they're stark. As of today, February 4th, the market sentiment score is sitting at a 14. out of 100.
14.
14. That is deep, deep in extreme fear territory.
Wow.
For context, neutral is around 50. When you're in the teens, you're talking about a capitulation mindset. It's actually dropped a point from yesterday, so the mood is getting worse.
That is incredibly low. And I assume this isn't just feelings. Money is actually moving, right?
Right. Oh, absolutely. This isn't just tweets. The correlation is undeniable. We are seeing massive outflows from Bitcoin ETFs. The data shows a $360.9 million outflow.
Ouch. Over $1/3 billion? That's institutional money walking out the door.
It is. And the price reflects it. Bitcoin is hovering around $76,089 this morning, down about 2.88%.
And the broader market.
Down to 2.65 trillion. But, and this is the fascinating part, the volume isn't dead.
I noticed that. Usually fear spikes, price tanks, and volume just dries up. But it's at 186 billion? That feels high.
It is surprisingly resilient, and that's a crucial nuance here. So prices are down, sentiment is in the gutter, yes, but the network is still very active. People are trading, they're repositioning.
So they haven't walked away from the table. They're just hedging their bets.
Precisely. The casino is still full.
Which begs the question,
Yeah.
What are they so afraid of? Because a sentiment score of 14, that they usually need some kind of, an external trigger.
And we have a massive one. This fear didn't just appear in a vacuum. There is a geopolitical stressor pressing down on everything.
The U.S. government shutdown.
The United States government is in a partial shutdown. It began on January 31st.
So we're a few days into it now.
Yeah.
What's the specific holdup this time? The market seems to be taking this one seriously.
It's a pretty heated dispute over DHS, Department of Homeland Security funding, and immigration policy. Classic gridlock.
And that uncertainty creates a risk-off environment.
Absolutely. When the government shuts down, investors get nervous about liquidity. They worry about regulatory pauses. I mean, who's manning the desk at the SEC or the CFTC?
So even if they don't like the regulators, they hate not knowing what the regulators are doing even more. It creates a void.
Exactly. And in that vacuum, capital flees to safety. You sell high-risk assets like crypto, and you move into cash, bonds. It puts immediate short-term pressure on Bitcoin.
Right. And looking at the reports, it's messy. The sources are saying it's Democratic opposition to President Trump's policies causing the shutdown, while Trump himself is actually supporting the funding bill.
It's a standoff. Now, there's a glimmer of hope. The House is expected to vote today on a Senate-passed bill to extend that DHS funding for 2 weeks.
A Band-Aid?
A Band-Aid, but, the market would welcome a Band-Aid right now.
True. Anything to reduce the uncertainty. And for anyone listening who wants to track this, our sources suggest following Speaker Johnson and the White House on X for the real updates.
That's good advice. Filter out the noise, look for the actual votes.
Okay, so
Yeah.
U.S. government paralyzed, investors fleeing. But here is the pivot. While the politicians are arguing, the builders are not paused at all. This Tether story, I had to read it twice.
It's a fascinating pivot for them, yeah.
Usually when we talk Tether, it's about stablecoin backing, audits, do they have the dollars? But this is completely different. They're getting into mining.
They are. And not just buying rigs, they're building the plumbing. They've announced something called the Mining OS, or MOS.
An operating system for mining. Okay, break that down for me. I thought you just plug a miner in. Why does it need an OS from a stablecoin company?
Well, think about a modern mining farm. It's not one machine anymore. It's thousands of those specialized ASIC computers in huge data centers.
Right.
They generate immense heat. They need constant optimization to stay profitable. You need software to conduct the orchestra.
To conduct the orchestra. I like that.
And right now, a lot of that software is proprietary. It's a black box from the hardware manufacturer. You can't really see inside. You can't tweak it.
Which is kind of ironic for an industry that's all about don't trust, verify.
It's a massive vulnerability. So Tether's MOS is open source and modular. The code is public. Anyone can audit it.
So they're trying to break up a hardware monopoly with software.
It's a macro play to decentralize mining power. They also released a mining SDK, a software development kit, so developers can build custom tools on top of it.
So Tether is trying to do for mining what Android did for smartphones. Provide that open layer everyone else can build on.
That's a great analogy. It helps the little guy and the big institutions get in without trusting a black box. It strengthens the whole network.
Which is huge. Okay, speaking of accessibility and bridging gaps, let's talk about MetaMask. This one kind of blew my mind. I use MetaMask for DeFi, for NFTs. I don't use it to buy, Ford stock.
Well, no, you might be able to. MetaMask has integrated Ondo Finance Global Markets.
And this lets you trade what?
Over 200 tokenized U.S. stocks, ETFs, and commodities directly in your wallet.
So I can be holding my ETH and in a few clicks swap that for a tokenized S&P 500 ETF.
That's the promise. 245 trading, 247 transfers. It brings traditional market liquidity into a self-custody wallet.
Okay, but here's where I have to play the skeptic, and the sources point this out. There are 30 jurisdictions excluded from this.
You spotted the catch?
I mean, if it were truly decentralized Web3, you wouldn't be blocking entire countries, right?
Right.
So is this really Web3? Or is it just a bank app wearing a MetaMask costume?
That is the central debate of our time, isn't it? The exclusions mean there is a centralized entity involved, almost certainly for legal compliance.
So it's like Web 2.5.
It's a blur, but it might be a necessary bridge. You can't just teleport the entire New York Stock Exchange onto a blockchain overnight. This hybrid model Web3 user experience, Web 2 compliant asset, is probably how mass adoption actually happens.
The mullet of finance. Business in the back, party in the front.
I haven't heard that one, but yes. It allows capital to flow from the crypto economy into the real economy, all without leaving your wallet. That's powerful, even if it's permission.
It's a stepping stone, and utility usually wins.
And utility brings us to the other side of the world. While the U.S. is arguing about funding, Hong Kong is hitting the accelerator.
The contrast is striking. Washington is paralyzed, but the Hong Kong Monetary Authority is targeting March 2026 for its first stablecoin licenses.
March. That's next month.
It's very soon. And notice the difference in tone. In the U.S., it's confusion and lawsuits. In Hong Kong, it's clear goalposts, risk management, AML, proper backing.
It's clarity versus chaos. And capital goes where it's treated best.
Which is why so much is shifting to Asia and the Middle East. Which brings us to the UAE and this diamond story. Diamonds on the blockchain, it's been a buzzword since, 2017? But this seems real.
It's very real. A partnership between Billiton Diamond, Control Alt, and Ripple. A $280 million tokenization initiative.
That is not a pilot project.
No. And they're claiming over $1 billion in polished diamond inventory is already tokenized.
So this is to verify origin, grading, authenticity, all of that.
And they chose the XRP ledger, citing speed and low cost, which makes sense for this kind of volume.
But wait, let's apply that same skepticism here. The sources raised a concern about the structure. It's a consortium.
So it's a permission system.
Exactly. It's not a fully public chain like Bitcoin. A group of companies controls the ledger. It's a club.
And the risk there is manipulation. If the club decides to rewrite history or double spend a token, it's harder for the public to even know, let alone stop it.
You're trusting the consortium, to be honest.
That's the trade-off. You get speed, you get regulatory approval from Dubai, but you lose that hardcore code is law guarantee.
But for the diamond industry, which is so opaque, this is a massive leap. If you buy a physical diamond today, trying to sell it is a nightmare. You take a huge loss on liquidity.
It's a terrible investment vehicle from a liquidity standpoint, true.
But you tokenize it. Now you have a digital asset you can trade on a secondary market. You're turning a rock into a liquid asset.
That's a great way to put it, turning a rock into a liquid asset. And speaking of liquids, this next story feels like sci-fi, but it's happening right now in Saudi Arabia.
The Saudi Water Authority and IBM.
Yes, the digital H2O platform. We're not talking about tokens or trading here. We're talking about basic utility, water.
This is the side of the tech that gets ignored because it isn't flashy. There's no coin to buy. But it is revolutionary.
They're using generative AI, data analytics, and hybrid cloud tech to transform how water is managed across the entire kingdom, which, in Saudi Arabia, is a matter of national security.
The platform does leak detection, predictive intelligence. Think about that. Knowing where a pipe might burst before it does.
Instead of just fixing a disaster, you prevent it.
And there's a consumer angle, too. An app for citizens.
Right, a citizen assistant app. It lets you track your usage, get conservation tips. It aligns perfectly with their Vision 2030 goals.
You know, it's amazing. We started this deep dive talking about extreme fear and a government shutdown. Basically, human chaos. And we end up talking about AI saving water.
That is the perfect dichotomy of this moment. If you only look at the price ticker, you see fear. But if you look at the plumbing, the mining OSs, the tokenization, the utility platforms, the growth is just undeniable.
So let's just recap it for everyone, because it's a lot to hold in your head at once.
Let's do it.
Macro level. U.S. government shutdown. Market is terrified. Sentiment is at 14. Money is flowing out of ETFs.
That's the noise, the immediate loud fear.
But underneath that noise, Tether is building an open-source OS to decentralize Bitcoin mining.
MetaMask is bridging Wall Street stocks into your crypto wallet.
Hong Kong is finalizing clear stablecoin rules for next month.
And the UAE and Saudi Arabia are digitizing physical reality, $1 billion of diamonds on a ledger, and AI managing the national water supply.
It is a classic case of signal versus noise.
Yeah.
The shutdown is noise. It's disruptive, but it's temporary. The infrastructure being built, that's the signal.
Yeah,
And it feels permanent.
that's right.
So here's the question I want to leave you with today. The sources say we are in extreme fear. People are selling. But the biggest players in this space are building mining operating systems and tokenizing global assets right now.
If they're building this aggressively when sentiment is at a 14, what happens when that sentiment flips?
Exactly. Are you watching the price or are you watching the plumbing? Something to think about.
Always look at what they do, not just what the market feels.
That's it for this deep dive. Stay curious, stay skeptical, and we'll catch you on the next one.
Take care, everyone.